Let everyone pile in here for a second. Live from Music City, this is your motivational, sensational, inspirational, educational, aspirational, international, keenly awaited, daily created, highly anticipated edition of the Afternoon Swing Trading Floor with your humble host, Matt DeLong and Jeremy Newsome, with another daily dose of mentally delicious brain food, reminding each of you to love life, live life, and trade it. Folks from around the world, if you're watching this video right now, very special introduction and super ecstatically pleased to announce that Matt DeLong and myself are going to be doing a small tweak to the afternoon room. And that small tweak will be that Matt DeLong will be hosting the afternoon swing trading rooms on Fridays. And what he'll be doing on Fridays is, for the first piece of Friday, he'll be reviewing and going over his concepts on his swing trade strategies that he'll be teaching in the upcoming classes. And then he will be going over those trade setups for you. And then at the end, since it's going to be very, very easy to go over those trade setups, we'll be answering any questions that you guys have. So we're starting today, since in another hour and a half, Matt is going to be teaching an incredible webinar that I'm very, very pleased to be a part of and be there with him and watch and see how his teaching skills have only improved over time, but also to help do as much as we can to always enrich lives. So Matt, I'm here today. Take it away, my man. Let's do it.
Thanks. We got Robert Falco. There we go.
Yeah.
Thanks. How's everybody doing? Where are my closet swing traders? Those are the day traders that are struggling, and maybe you're thinking swing trading is more your thing. So
let me who's coming out the closet?
Yeah, that's right. Let me get my screen sharing going, and we can get going here. All righty. Can everyone see my screen? Oops, wrong screen. This one. Can you guys see my Beyond Meat?
Yes, sir.
There we go. Let me remove some lines here. All right, and then I lost my chat window. There we go. Sound is muffled, Matt. Let me pull this a little bit closer. How's that, everyone? Everyone hear me okay? Better?
Yeah, sounds good to me.
All righty, cool. Thank you guys for pointing that out. So I will be, as Jeremy mentioned, I'll be taking over the afternoon rooms on Fridays. So maybe we'll call these DeLong Fridays, and we will watch and review the DeLong watch list.
That's right.
So go ahead and type a 7 in the chat pane if you are a closet swing trader. There we go, Nitro. Yes, Ariel, Alan, Brett, Quentin, Edward, 7.5. Jay, Albert, quicker than I can read. Mike, Craig, Justin, Jason, Matt, Ron, Albert, Allison. Nice, nice. So I wrote an article a couple weeks ago about like my struggles and my journey as I was insistent on becoming the world-class day trader that I was not supposed to be, and kind of the process that I went through to just kind of realize that I was more of a swing trader than a day trader. And I'm trying to push that a little bit more. So lots of people want to make money in the markets, but as you know, day trading is not the only way to do that, right? So I have some things I want to share with you guys this afternoon. All right, one sec. Let me get a document open. Okay, so what I'm going to do today, guys, I'm going to take a little bit and explain a basic strategy that I like to teach. And I've shared this before in the afternoon room, I don't know, a few times. So I'd like to go over it with you guys here. And as Jeremy mentioned, we're going to be kind of reviewing this every Friday. And I have a watch list I will share with you guys as well. And we'll review that watch list every Friday and kind of look at the strategy and see what's setting up. And let's take some official trades together. How does that sound?
I'm pumped for it, man. I'm in.
Yeah.
I'm ready.
He's a swinger all the way.
I got some cash on hand ready to set up these trades.
Yes, let's do it. Let's do it. So I'm going to walk through the strategy. Let me get this open. And we are, some of you guys may not know this, but we are building a strategy, like a strategy recipe black book So imagine all of RLT's top traders building a list or a recipe book of strategies that are not just here's what I do, but like an actual recipe format where here's the ingredients, you need this time frame and these EMAs, and here's the step-by-step guide. So that's coming soon. That'll be announced here probably in a few weeks. And we're working on that. And then we're also building a second one, which is like RLT favorites. So it's basically all the community favorites. So the Angela will be on there. Some of the community favorites for RLT will be on there as well. So excited to get that built and share with you guys. It's gonna be amazing. It's gonna be amazing. So I'm trying to find this document. I had it open on my laptop.
And I'm assuming your strategy will be on there as well.
Yes, absolutely. Every single one of my strategies on here. Absolutely. All righty. So let's get into the guts of this opening now. Okay, so let's talk about the strategy itself. So the strategy uses, as you guys know, most swing traders use like an hourly or a daily time frame, daily chart. And for those of you who are brand new, a daily chart, you can just look at a chart and see the 1D designation up here in the top left corner of TradeView. And what does that mean? That means daily chart. That's right. So what we're going to do is I'm going to go ahead and write out here what the actual strategy is. So strategy is number one. What do we want to do? We want to define and only find stocks in an uptrend. Now, what does that mean? So for those of you who don't know, what does stocks in an uptrend look like? So think of it like bottom left to top right. So uptrend. So think about, is this guys, yes or no? Is this an uptrend? Bottom left to top right, yes or no? Yes. Okay. What about Tesla? Community favorite for RLT. Tesla. Bottom left, top right. What about Roku? We were to zoom out a little bit. It's got some chop through a little bit of the end of last year. Yep. So you guys see what I'm talking about. So if we were to go back to Beyond Meat, BYND, and number one, stocks in an uptrend. So what about our second step? You guys ready for number two? Number two is find and locate stocks that closed below a 10 EMA yesterday. So what does that look like? Let's look at something like AYX. So on my chart, this blue line is a 10 EMA, 10 exponential moving average. And some of you may know an exponential moving average, the math on how it works is a little different than a standard simple moving average. So it takes a little bit more of the most recent date, most recent time frame, and weights it a little heavier, kind of like grades it on a curve, so to speak, and adds a little bit more weight to the most recent time frame. So what we're looking at here is this right here, closed below yesterday's candle. AYX closed below the blue line. You guys see that? Can you follow me?
Can you do me a favor, Matt? Can you make your 10 EMA thicker, kind of like your green one?
Give it a nice,
nice little thickness.
Boom. How about that?
There we go. I like that.
All right. So yesterday we closed below the 10 EMA. Everyone agree?
Yep.
Okay. So that actually I need to retype this. Sorry about that. So number one, stocks in an uptrend. Number two are closed below the 10 EMA yesterday. Guess what number three is, guys? Close above the 10 EMA today. So here's how this works. We're looking for stocks in an uptrend, which we already identified. We're looking for stocks that have closed below the 10 EMA yesterday, but today they closed above. So what the strategy calls for is something like this, where we have like a U-turn. So we're looking for an uptrend, right? This is what an uptrend looks like. And then we zoom in a little bit on the daily chart. And let's say that this line is our 10 EMA. We want to close below and then close above. That's kind of what we're looking for here. And so what we're doing is we're setting up a trade and we're going to buy at the close today. So I was actually headed back out of town today. this afternoon so I can join you guys and share some of my strategies. And I was sitting in the car, someone else was driving, and I'm like, oh, AYX, boom, got a trigger. So for those of you who have not seen this, there is actually an indicator that I built that makes this whole process a little easier.
What?
And
Indicator?
Yep, indicator time. Now I know Jeremy is a little, we'll say, is it hawkish or neutral on indicators? As you guys know, indicators can be used as like a crutch or training wheels. At some point, the training wheels have to come off, and you need to be able to, make decisions on your own without all of these, without the flugels, right? You got to get out in the open water and swim. So what I have here is a little green arrow, and that just tests, hey, was yesterday below, closed below, right? And then today we're closing above. So
And that's 2 consecutive days, Matt, that it has to occur like that?
It does not have to be 2 consecutive days. No, it can be 2 or 3 apart. So as you guys see here on, let's close this back. Let's roll this back a little bit. Here, we actually close right here below, right? Right, Jeremy, on this day, we close below.
Yep.
On this day, we still also closed below, but today we closed above. So it doesn't necessarily have to like pierce it on day 1. But yesterday needs to be below today. So that's really all it does. It looks at increments of 2 candles. Sorry about that. Was yesterday below and today above. That's basically what it does. And it looks at any 2 sets of candles to make a yes or no determination. So can everyone put a 1 in the chat panel if that makes sense? If I need to slow down, re-explain things, everyone jiving with the strategy. Now this is strategy number 1 in this is a basic swing trade strategy. So for some of you who are coming out of the closet, this is it.
Now, one thing that I want to bring up is Matt does have a selection criteria for his companies, because one thing that is most likely you are already finding out in your brains, ladies and gentlemen, is you can have thousands of stocks that do this every day, literally thousands. So you can't trade all of them. So Matt's going to be discussing a little bit about how you can kind of boil down all the stocks out there to which ones you focus on. Because anytime, in my opinion, you have like a template, boilerplate, very structured and rigid set of plans, you need to boil that down into the select group of stocks that you use as well.
That's right. And I have a watch list I will share with you guys.
Yeah, make it even easier.
Just a moment. So most of you know I only trade 15 stocks. 15. I only have 15 on my watch list. Now, how much easier would your trading be if you don't have to build a watch list every day from scratch and look at this stock and look at that stock and stocks you never heard of? And how much easier would life be if you had the same 15? Now, what happens if you want to add one and like sneak in number 16? Well, take one off. And so
that's right.
Still have 15, right? It just, life is easier. Now, the good thing, I will say the advantage, there's advantages and disadvantages to having a fixed, like static watch list. But one of the things that I think is really helpful is you can learn the personality of how some of these stocks trade. So all of you know Tesla trades very differently than a lot of other stocks. Shopify, they all have their own like little personality. So when you trade the same list, you kind of learn a little bit of the personality and how they flow, because you're looking at the same 15 over and over and over every day. Now, I do have 3 main strategies that I use, and this is part of one of the strategies that I'm teaching you guys here today. Here in about an hour and a half, hour, 15 minutes, I'm gonna be teaching you a different strategy. But again, it's that same 15 watch list. So let me go through the rest of this, and then I'll pull out my my list. You guys with me still?
Yeah, man.
Okay. So number 4.
There's a 4th.
Number 4, and this is one more criteria. Okay, the price action needs to be above the 50 EMA today. Now, what does that mean? The 50 EMA on my chart is this green line. Okay, so if you were to look at, let's see. Okay, so if you were to look right in this area, let me get my painter out, Mr. Squiggles. And if you were to look, let's see, right here, these 2 candles, this one closed below my blue line, right? And this one, the big white long day candle, that one closed above, correct?
Yep.
So that met my criteria, is that right?
The first three.
Yes, but not number 4. So number
Ah,
4 is we need to be above the 50 EMA. Now, some of you may know that the 10 EMA is considered kind of like a short-term, widely used moving average. The 50 is kind of like a medium term. Now, when we're talking about a 10 EMA, we're talking about 10 trading days, so essentially 2 calendar weeks. A 50 EMA is roughly what, 2.5 months, basically, right? 2.5 months. So that's what the 50 EMA is. Now, in this case, we did not get a green arrow, oops, or a trigger to enter because number 4 was not true. So this did not close above the 50. It would have had to close up above the green line. So in AYX, AYX is on my watch list. I actually surprisingly did not own it on this way down, but I did build a position, and I did ride this up with a slightly different strategy that I use. And so I didn't have the stress of this massive move down after earnings, but I did get to benefit from the move up. So ladies and gentlemen, your job as a trader is what? What is your one and only job as a trader?
execute the plan.
Execute the plan. Now, if you had a pretty basic, straightforward plan, and your job was to execute the plan, and you took trades that followed the strategy exactly, and you lost 1 or 2 R's, are you going to be stressed? Yes or no? Hopefully you might be, but hopefully you grow out of that initial stress, and hopefully you just follow the plan and you realize the plan is there to help you. It's to make life easy, right? It's there to facilitate the decision making over and over and over every day. So you don't have to make decisions anymore. You just follow the plan. The plan decides when to enter, when to exit, how many shares to buy, right? The plan does all the heavy lifting, and you just run the plan, right? So for some of you who played sports in high school or college, if it was basketball, if it was football, you guys know that the coaches, you have predetermined plays that are already figured out ahead of time, and the coach does a signal or holds up fingers, play number 2, something like that. And that's kind of how this should work. Trading should be super dry and boring. Now, if you want exciting and crazy and emotional and heart racing, go play some video games, go play Call of Duty, go do something that can, and go outside, do some adventure racing, go kayaking, do something.
No.
But trading should be kind of slow and boring. So Jeremy and I are both up. Jeremy's up, what, 35 or 40? What'd you say so far in October? What was it?
37-ish.
37. I'm up 31-ish. And that was only on 7 trades all month. Now, yes, I got lucky, and sometimes I'm prepared and I'm in the right place, and we call that luck, right? And so this kind of stress-free trading is kind of the thing I'm trying to push for some of you who are struggling at day trading. Maybe swing trading is your thing, but stick with me, and we'll show you kind of how I
or even if you're not struggling with day trading and you just want to be a swing trader, what helps is to know how to build a plan, because it seems obvious enough, but one of the questions Matt used to ask me a lot was, Jeremy, how do you mathematically define how a stock is in an uptrend? Remember that, Matt?
Yeah.
So you can see it visually, but how do you tell a computer this is in an uptrend? And so you have to answer that question. What that does is it removes variables, because in order to execute a plan in trading, one of the most important and impactful things you can do, or we can do, is remove variables and increase consistencies.
That's right. That's right. Absolutely. And again, your job is just to execute the plan. So if you take a loss, you lose 1 R, oh, well, life will continue, right? Markets will be open again tomorrow, or in our case, Monday, right? Civilizations will continue to flourish, whether or not you lose an R today. Don't worry about it. It's part of it, right? And so for those of you who are at the retreat, we actually did this little exercise where we flipped the coin. Do you remember that, Jeremy? So we flipped the quarter, and heads, if you got a heads, you win 2 R. If you got tails, you lose 1 R, right? So 2 is like a 2-to-1 ratio. And you guys can probably guess 50-50 odds of heads or tails. And after 10 flips of the coins, you remember how much we were up, Jeremy? We were up 8 R.
Yeah, I'll say, okay, I didn't remember.
So even if you guys take trades and half of them work and half of them don't, as long as you can make 2 R for every 1 hour loss. And that's a 2-to-1 ratio. Jeremy's numbers are 0.7 and 1.4. So, you know, it varies a little bit, but somewhere in there, still a 2-to-1 ratio.
Yeah, about to say it's still a 2-to-1, even though I lose 0.7 and 1.4, it's still a 2-to-1
Exactly.
ratio.
Exactly. So number 1, stocks in an uptrend. Number 2, close below the 10 EMA yesterday. Number 3, close above the 10 EMA today. Number 4, price above the 50 EMA today. Number 5, you ready for number 5? Number 5, buy at the close today. We'll say it like this: limit buy at the close today. So what does that mean? That means I got triggered in AYX today, right at the close. Boom, right at the close. Now, if you're using the traditional R stop market, you can obviously put a stop down here. I can't obviously back trade this exact thing because we're caught up live. My right click is not working.
Yeah, that was happening the other day on Trading View. It was weird.
It's like certain, that line will work, but this one won't. That's weird. Okay, just imagine that says limit buy right there. So how do you limit buy at the close? This is not market on close. Be careful with those, especially in spready stocks like Shopify, as a $1.50, $2 spread sometimes, right? You don't want to get kind of hosed on getting into a trade and hosed getting out. So what I do is about 5 minutes before the close, I will go ahead and set up my order. I already know where, hey, I got a green. And you can, by the way, you can set up alerts with this. Someone who has this indicator, some of you guys I know use it, and I have some examples. Some of you guys actually sent me your trading log, and you're like, wow, I'm up 13R today. Thank you. I'm sorry, 13R for the month. So some of you who have that, can you post a link in the chat pane? I can find it in just a second, but if you have that, can you go ahead and post the indicator 10 EMA, or Jeremy, maybe you can find that real quick and post it. And I will show you guys a little bit more about how this works, how you can install that on your trading view. And I believe there's a few people who have adapted this for Thinkorswim as well. So what I do when I buy at the close is I basically put in an order about 5 minutes before the market close. I'll put in a limit buy order. Okay. Now, if I want 200 shares, I'm going to micromanage that order. I'm going to watch it very closely to make sure I get filled at the close. Now, it's important to make sure that you think about how you execute this, because you can't have an open limit order and not get filled and wait for the next day, like in our case, or wait, the next trading day is Monday. Excuse me. So what I try to do is try to get that order in. If it doesn't get filled within the first 5 minutes before close, do a limit buy. If it doesn't get filled within the first 30 seconds, I'll go in and edit the order, right? And I will kind of keep playing with the order until I get filled. Now, sometimes I may get filled partial, like today I got about 95% of my shares, and the market closed, boom, I'm in. I'm done, right? I'm in the trade, I'm done. And so, so Thomas Wong has posted it there for you guys. That's the 10 EMA basic swing trade. It's basically what we're talking about right here. And so I do recommend you micromanage the limit order to ensure that you get closed before market close. Now, what happens, guys, if you micromanage the order and the stock after hours kind of goes like something like this, right? Well, you're going to be down just a little bit, which is fine, right? Because we're executing the plan. We don't care about the ups and downs throughout the life of the trade. We don't really care, right? Or we shouldn't care. And so one of the things that really helped me a lot that Jeremy told me about was don't pay attention to the P&L. How many of you guys put a couple asterisks in if you are obsessed about the P&L on a daily basis, look at it over and over and over, especially your retirement accounts, guys. Those are years, decades away for some of us. And so you just like hyper focus on the wrong thing. Now, for those of you who played sports, how often did you look at the scoreboard? If it's a team sport like basketball, soccer, football, how often did you guys look at the scoreboard? Now, you probably didn't do great if all you did was stare at the scoreboard, right? Like life is happening, the game is going on, right? Plays are in action, and you're just focused on the P&L or the scoreboard. In this case, our P&L is our scoreboard. And so don't even pay attention to the P&L. All you should focus in on is executing the plan. And once you get this down, you can do it in your sleep. It makes life so much easier, so much stress-free. And I literally have spent probably less than 3 hours all week this week, probably a little less even the week before. And I'm up 30.7 R. Now, I will tell you, one of the secrets to having a good month is if you can take some unrealized R. So we're here at October 23rd, got about a week left for the month. You can take maybe 5 or 6 unrealized R's and push them into the next month. You're going to automatically set yourself up for success, right? Because assuming things go well and the market continues, going in your favor, of course. But why not take 5 or 6 things, push into next month, stress-free trading? It's what I'm about. Amazing, right? And so again, what I'm doing here is I am doing a limit buy at the close. Does everyone understand so far? Number one, stock uptrend, close below the 10 yesterday, close above the 10 today, price above the 50 today, limit buy at the close. Any questions? Jeremy, got any questions?
I'm good so far.
Okay. So guys, on an effort level, on a 1 to 5 scale, I would put this about a 1. This is a basic beginner swing trading strategy. And actually I can create a little PDF of this and put a.
But you do need to be near the computer and near the market at the close. Now, it's not every day, or do you do it every day?
I look at it every day. So the way I execute my plan is I block off on my calendar 1 hour before the market close. I block off and I call it market prep. And I'm going to look, do I have any positions that are about to go over earnings? Do I want to hold it over earnings? Sometimes I will hold over earnings if I have a nice healthy profit cushion. I'll hold over earnings and I'll maybe buy up. Let's say I'm up 3R on a trade. I might use 1R maybe, or maybe 0.75 of an R to buy a lower price put. Or there's all kinds of things you can do. But one of the things I need to make sure is, am I okay holding over earnings? I've lost more R's trying not to hold over earnings, getting my earnings date wrong, but you have to have this disciplined approach. So holding over earnings, do you want to do that or not? Obviously, if you're holding for months, years, or decades, you're going to have to hold over earnings. If you're doing it a longer term, of course, you have to. There's no choice, right? Because it's every 3 months, every quarter. So that's one of the things I do. The other thing I need to look at is, do I want to increase or reduce risk? So think of it like, some people call it risk on, risk off. Have you guys heard of that before? Where let's say I have 3 to 5 open positions and have a whole bunch of open orders. Am I okay going into the next day with a bunch of open orders? Maybe I am, maybe I'm not, right? I need to look at where I am in the month. Maybe some of these trades set up and I'm up so much on the month, I don't want to give any back. Maybe I'm take the rest of the month off, right? I'm up 30.7 R halfway through the month. Let me take off the next 2 weeks. Again, stress-free trading. Trust me, guys, it's great. Come join us. So that's one of the things I do also is look at, do I want to increase or decrease risk? Now, some of you guys know at the beginning of September, Jeremy said, hey guys, we're up here, way up and kind of at the all-time highs again. And we gap up and he's like, okay, guys, this is getting a little crazy. Is a little too easy. Let's go ahead and go to cash. And so some of you, like myself, some of us went ahead and executed the plan. Let's do that. Let's go to cash. Let's lock in our gains. And so one of the things I do is I need to think about, am I increasing or decreasing my risk? So do I want to lock in my gains, my unrealized? Do I want to go ahead and realize my gains and kind of reduce the number of open positions? Let's say I have a couple leaps, right, that expire in July next year. I'm going to leave those open, right? They're still kind of longer term. They're farther away. They may go up and down a little bit every day on the P&L, but I'm okay with that. So that's one of the other things I do is think about, do I want to increase the risk? Am I holding over earnings, or am I willing to hold over earnings? And then are there any new tickers that are setting any of my 3 strategies up today?
And one thing that I've done over earnings with the strategy like this, team, is especially if I'm up, I'll exit the vast majority of the position and maybe leave 20 shares or 10 shares. If I'm in like 350 shares, whatever, I'll sell 330 and just leave 20 over earnings if I really, really want to do it. But you absolutely can hold. Now, Brett has a really good question, Matt. So Brett says, do you have a threshold where if the price moves too far above the 10 EMA where you feel it would be better suited for the retracement, or do you just simply buy at the close regardless?
So I buy at the close regardless.
So you're telling me you follow the plan always exactly.
Life is so much easier when you just execute the plan, guys.
So
I
are you
promise.
telling me that you execute the plan precisely all the time?
Yes, that's my job. That's my one and only job.
But are you saying if it closes above the 10, then you get in at the close of market?
Yes. It's really simple, guys. It's not hard. It's not hard. Now, Jeremy and I can tell you guys, here's exactly what we do. And you guys, yeah, that's amazing. You know, we're at the retreat, high-fiving everyone, going through the tunnel of people, right? And if you guys don't execute the plan, you're going to miss out. So we can't take these trades for you, but it's fairly basic. Now, Robert did have a question. I saw this.
Yep. He says, what do you
If
do
it's whipping around, right?
if the price is whipping
one thing
around?
you can do, if it's like really, really close, one thing you can do is you can go ahead and put in a stop limit, right? You'll know roughly where it is, give or take maybe 10, 20 cents, right? If it's up above up. And so if it's, let's say 2 minutes before the close, you can go ahead and put in a stop limit. I haven't really had that happen a lot. It does happen every once in a while. Sometimes my order doesn't get filled, and it doesn't matter because I didn't get it anyways, one way or another. So, yep. So I don't know if that makes sense, Robert. Yep. So not after the close, but 3:55. So yeah, again, 5 minutes before the close. Again, on my calendar, I have 1 hour blocked off to look at this, make some decisions, decide, do I want to increase, reduce? I'm looking at all my open orders too. Sometimes you guys probably like me, we have tons of open orders for maybe put sales or other strategies, and your buying power is all tied up with orders that haven't been filled in months. So I might close some of those down to kind of free up some buying power. So again, guys, it's not that difficult. It's fairly easy. And I think it's a pretty easy, pretty kind of simple starting strategy. Now, someone asked me the other day, do I run this exact strategy? I actually run a slight variation of this that's a little bit more complicated, but I want you guys to get the basics down before we get into the kind of advanced pyramiding and something that's a little more complex. So tell me, guys, does this sound amazing? Does this sound like this could help you in your, I know some of you, I talk to you guys all the time. And I know some of you are like on the edge of, and I'm going to give up on if I can't squeeze some R's out this month, I'm just going to give up on trading, you guys. And I'll tell you, Jesse Itzler said, you haven't come this far just to come this far, right? I mean, you guys gave up a lot just to be here right now. And so we want to help you get through to the next, have some breakthroughs, get through to the next level. Yep. Yep. So, do you have a rule about open risk you have out there at one time? I'm trying to finalize a basic way to do that, Nitro, but if I need, so let's see, it was a few months ago and it was the last week of the month. I want to say August, and I was only up 3 R's. And I was up 3 R's realized for the whole month, and we were headed into the last week. I'm like, well, maybe I need to increase my R's. And so part of increasing your risk is not just adding dumb trades, which, by the way, guys, if you just here's a rule you should add to your trading plan. Only if a trade matches one of your strategies, one of your plans, then and only then are you allowed to take it. Don't just take it because Afternoon Room took it. Don't just take it because the moderator said he's taking it. You have to own these trades yourself, because at the end of the day, it's your account. You're building you're planning your money tree. And you're letting it grow, right? So that one of the things that I learned is, Matt, don't do dumb stuff. And I stopped giving back lots of R's. I'd make some R's, give it back, make some R's. So I stopped doing dumb things and just, this guy I follow on Twitter, he said he's long in Facebook, so I'm just going to jump in Facebook. Don't do stupid stuff like that. Just let the plan work for you. It's like the chainsaw with the teeth. Let it do its thing, right?
Yeah, and I'll mention for like 2 minutes really quick, when we're talking about the psychology of trading, in the essence of active trading, because everyone who is here and most people who do trade the market want to trade full time, and they think full time, they think 40 hours a week. I mean, who doesn't? Anytime you work full time at any other job, you're working 40 hours a week. The thing is, trading is supposed to be easy. If you want it to be easy, it can be easy enough where you can spend a lot of time doing it. I work, and both Matt and myself put in 80-hour work weeks before Friday gets here all the time. But it's not only trading. We have multiple other businesses, multiple other streams of income, multiple other things that we do. But the trading, the actual like me in front of the computer, clicking buttons, analyzing charts, and really, really grinding is like 20 hours a week. So keeping in mind, a lot of traders are actually afraid of all of the free time that they will have if they make trading simple. And so they subconsciously disallow themselves to make it really easy in their trading.
That's right. And like I mentioned, I trade full time, but that just means 3 hours a week, right? How many of you guys like to work 3 hours a week full time, right? Stress-free trading, right? So again, it's simple. It's there's not a lot to it. It's not some, complicated thing. It's pretty cut and dry. This does not require you to identify the perfect support and resistance levels or figure out where you want to draw your Fibonacci's or
Yeah.
know the wave counts. You can certainly add and complicate that, but I want to teach you the basic vanilla strategy that you can,
Yeah.
add your cherry and strawberry toppings on, however you
Yeah,
want.
exactly. I had a trader today. I was texting with Matt that said, man, Jeremy, if I had just left all my positions alone that you were telling me about in Pinterest, I would be up 300 grand. Because he had a lot of positions in Pinterest and was just kind of like trading in and out, in and out, in and out. You guys know I'm still in Pinterest. I haven't been trading it actively that much. And that's one of your stocks that you are on your list as well, Matt. So that's another piece of it is sometimes you just got to leave it alone.
Yep, let it do its thing. That's right. Now, so at the retreat, Jeremy, I won't mention his name, but someone did tell me that they had GoGo. I had 100 contracts of GoGo that I bought at the end of $4 strike at the end of March, early April. And some of you guys know that right around the end of August and September, it went from like $3 up to 10, $11. And I had 100 contracts of that. And someone told me, oh, it wasn't going anywhere. So I went ahead and exited. Now, some of you guys, that's okay if that's part of your plan, but how many of you guys know you tend to sabotage yourself by tweaking it and trying to lock in little bitty gains, and you end up like hurting yourself long term. And so for me, the way I think about it is, if it needs more time to work out, I'm going to give it more time to work out, right? It's either I'm going to get stopped out or I'm going to take my target.
No, I have to remind myself of that all the
Yeah.
time, people, all the time. Like on a daily basis, I have to remind myself of if it's working or if it's not losing, then just leave it alone. Like if I'm getting stopped out, fine. If it looks like something is tragically weird or it takes out a really, really good support, or if I can see evidence that it's not working, but I often remind myself, I am not good enough to know when a stock is not going to work. So just stay in it until it either definitely doesn't work or you can start increasing your risk and losing small.
Right.
Now, Tracy did have a very good question, and so does Amy. So they want to know, how do you determine your stop on this trade?
Ooh, so this does require a little bit of practice. But what I do, and I highly recommend every single one of you guys who are interested in the strategy, is don't go jump in anything just because I'm in it or because I like it or whatever, or Jeremy likes it. I recommend you all back trade this for at least a couple weeks. So put in hours and hours and hours, go through all 15 stocks, go back a couple years, spend some time on this. And most of you know that back trading really is like the batting cages for stock traders, right? It's the sparring for stock traders. It's the practice and the scrimmages and these sports terms that are just practice, like a dress rehearsal almost. For those of you who are in drama or theater, it's the practice. And so what I learned, one of the things I learned when I started back trading some of my own strategies, is I always put my stop way too tight. Have you guys ever done that before? put some, yeah. So Alan, yep. So I used to do it all the time, and I was right about the direction. My stop was too tight, and how big of a dummy did I feel that it didn't actually Harry Potter. It actually stopped me out almost to the penny, and then it rocketed higher without me, and I took a 1 hour loss only to find out I could have been in 3 or 4 hours. So I give it a little bit more room. So this piece does take a little bit of practice to determine where you put your stop. You can certainly put it wherever. You can also buy shares and buy a lower strike put at the same time if you wanted to. That's not part of the strategy. There's different variations and flavors that you can put into this. But again, once you back trade it, you get an idea of how these trade and how these work. Now, if you're asking how did I pick that exactly, you guys can see kind of this pivot area right here where Oop, that was a terrible straight line. Mr. Squiggle's been drinking a little too much today. So you guys can see where it kind of hit its head a little bit. And right, I have a stop order right there. So yep. Questions. And I'm going to show you guys some more of this, and then I'll give you my watch list.
Yeah. So the big one is how do you determine the stocks on your watch list?
That is a whole nother specialty. But because you guys are real life traders, I'm going to give it to you. So most of my lists are tech companies. Okay. So if you want to look at a company that is growing fast, super crazy, amazing innovation, does this look like to you guys? Is this bottom left to top right? Not really. I mean, if you look past COVID, yes, but this isn't really like a super amazing. And you guys ask me all the time, like, Matt, I'm gonna sell naked put on Ford because it's down. Like, guys, does this match our criteria for an uptrend? You can make a little bit of money, you know, in this, but this is a down escalator, right? It is a down escalator. So you can run up a down escalator or up a down or down or up. You can do that. It's possible, but you expend an enormous amount of work and energy trying to get a little tiny partial fractional R. Why not just follow the strategy and let's go up? Now, tell me, guys, does this look like an uptrend to you? Is that an uptrend? Now, I remember Blake Anderson and we were talking about Shopify, I want to say 2016, back when it was around 2040s, back in this area. Now, this is Shopify, guys. And I probably made more money off Shopify than any of my other trades combined. But you guys can see this is an uptrend. Now, yes, will this go lower? Probably at some point. Will it go higher? Absolutely. Right. So you don't necessarily have to get the exact precise entry all the time. What you need is a plan that you can execute over and over and over. So let's back trade this just a little bit. Let me show you how this would set up. I'll just for ease of use of illustration, I want to find a perfect example, textbook example, so I can show you guys. Okay. So our, oh, and by the way, guys, I also have an optional thing. Number 6 is a trailing stop. You can put a trailing stop in place, right? I'll show you how to do that in a second. So here I kind of passed that already, but let's look for, boom, guys, look at that. What candle, for those of you candlestick masters, what candle does that look like to you? Does it look like an MC hammer? Yep. So again, I got my green arrow, so I have permission to take off, right? I have the ability to take a trade. So what am I going to do? I'm going to buy at the close. Now, again, guys, this is a textbook example. They don't all work this perfectly and magically immediately. And I'll show you some more. So I'm going to limit buy here, and I'll probably put a stop mate. Oops, wrong one. I accidentally hit the back. Let's change this up. Let's make this a stop market order. Okay, so I already went back to my, what happened? Oh, here we are over here. Sorry. It when I changed stocks, it undid my my replay. Let's try this again. Let's go here. All right, guys, here we are. So limit buy here, stop down here. You could move the stop for everyone. It doesn't make much of a difference. But here's how the strategy would play out. I'm going to limit buy at the close, June 12th. At the end of the day, boom, we're in, right? Now, some of you guys are used to buying at the open and selling before the close, right? Day trading in and out the same day. Think of this as swing trading, but you're buying at the close. Yep, that's another one right there.
Now, did you also get in there and get stopped out, or did you stay in?
You would have got, well, depending on where you put your stop.
True.
If you put it down here, let's take a look at it. Let's do that. Let's put the stop there. And
so is there any hard math or rules of where you put your stop, or do you still kind of like feel it out?
That's the only thing you have to really feel out a little bit, is where you want to put the stop. And you get a better feel for that when you practice it, right? So it's still not like you got to have 12 years of experience to figure this out. It doesn't have to be hard. Now, my boy, I believe he's on here. I saw him comment a minute ago. I believe Alan Stanley. I believe he spent like 5 hours and back traded Shopify. Alan, if you're still here. Yep. So he went and back traded Shopify for, I think, 5 hours straight using the strategy. Alan, can you post how many hours to back trading, guys? Obviously, just practice. how many R's did you make back trading this exact strategy on Shopify? I think it was like 200 and something R's, 226.47 R's. Pull up to the second window, please. Right? Yes, please. I want.
And I have 4 of those.
Yeah. Now, obviously, again, guys, you can pick a random stock to try this on, but it has to meet number one, uptrend on the daily. When I did a put sale class a few years ago, people asked me all the time, Matt, what do you think about this or that or this? And none of it even remotely matched the criteria. Matt, I'm down big time on this put sale you recommended. I'm like, no, you didn't. You took my strategy and took some of it out, and it became something other than. So how many of you guys know if you alter the recipe, the outcome is going to be different, right? If you alter the recipe, outcome will be different or unknown, right? So in this case, what happened, guys? We bought the close here. In this case, how much would we be up or down right here? We'd be down maybe what 0.4 R, Jared? Does that look about right? Something like that.
Yep.
So if we put our maybe a 1R target up here, and maybe a 2R up, 2R. Does that look right, guys? Something like that. So at this point in this day, when we get another signal, if we're not in, we can jump in on this candle. But if we're in, we do not pyramid, we do not combine this strategy. I do on some other strategies, but this one I do not combine. So if I have an open position on Shopify and I get another trigger, I do not add. I will just ignore this trigger because I'm already in. I'm already in Shopify long, right? Okay, so here's what's going to happen. We're going to play. Okay, boom. So now we went from being down 0.4 to being up maybe 0.3. Everyone follow me? Okay. Still looks like P&L probably would have jiggled all day, but probably closed roughly the same. Okay, up a little, kind of a new high relative to our P&L when we entered the trade. Boom, on our way to 1R town. Ooh, look at that.
Now, how much do you exit at 1R?
I wave. I exit 0 at 1R.
Nice.
0. I'm looking for 2R.
Nice.
I want 2R. Now, because of this, because it's already going so well, guys, and if I entered on this candle, if we already had kind of this U-turn, I would move my stop up a little bit, just not to break even, but maybe up. So I would probably move it up to here. So I'm gonna, worst case scenario, I'm going to lose just a smidge. I'm sorry, I'm gonna win just a smidge. Okay. And again, guys, you have to have a 2-to-1 if you want this 50-50 odds to work in your favor. Okay, so if I get some kind of a pullback and a rotation higher, I'm going to move my stop up just below that. If that appears, if it doesn't, that's fine. There we go. Let's see if we can go higher on the next candle. Yep. Okay. So I'm going to give it one more candle. Okay. So I'm going to move my stop up right about there. So worst case scenario, what? Jeremy, how much am I going to make worst case scenario? Maybe 0.8, something like that.
Yeah, something like that. Yep.
Okay. Again, guys, stress-free. Again, at this point, if we're playing a daily candle, we're in about a month so far. Now you're like, I got to wait a month for 2R. What if you set up 10 of these and they're like a merry-go-round and you're getting on and on, different positions are getting on or off at different times, right? You're getting on and off the merry-go-round at different times. And you're able to 2R, 3R, wherever, if you're moving your stop up, whatever you're doing to execute the plan. Okay. Ooh, look at that lower shadow, guys. What does that mean? Lower shadow.
It keeps holding, baby. That's what that means.
It means it wants to bust out higher. There we go. Boom. Okay. Now, what happens if you had an open limit order? What happens if you had a full-time job? You had open limit order to sell at the 2R target.
It would hit and sell.
Stress-free. Now, what if you're intraday kind of watching it and you blew past your 2R target? Okay, go ahead and take a 2.5R bite out of the trade. Now, you could move your stop up. You can play it a couple different ways as far as taking profits. You could peel off a percentage position. You can do whatever you want. But at this point, this kind of met our requirements. You're allowed to take off profits, all or partial, whatever you want to do, right? Stress-free trading. But I'm curious what happens after this. Oh, a brand new high. You could almost hit 3R if you're still not quite 3R. Yep, pull back. We're going to hit a new high here. Oh, we did just a smidge. It didn't hold. All right, what's going to happen? We're probably going to get another green arrow. There we go. Boom. How did I know that was going to happen? Because we're closing a couple days in a row below the 10, which means a strong candle the next day, close above.
Now,
all right, ladies and gentlemen.
One clarification question.
Yep.
So you have a green arrow. This is the 10 EMA here, and the close of the day is here. Are you getting in at the close on that day?
I actually am. Now I know most of you will say, oh, what about a 50% pullback? Guys, I'm giving you the basic vanilla strategy. Okay.
Yeah.
If you choose to alter the recipe, be prepared to alter the outcome. Now you can tweak it and you can put Fibonacci, you can add whatever you want. This is the vanilla sundae.
Yeah.
You can put the nuts and the caramel, whatever you want on it.
Yeah.
But I want you guys to make sure that you're okay with the vanilla sundae before you layer up a bunch of other, topics.
Totally.
Yeah.
And again, we're talking about adding your position, guys. Like if you're adding your position, same thing. Like that piece of it we'll talk about later, but all of those aspects, if you're asking those questions, you might be a little bit more of an advanced trader in general. So in this situation, Matt, would you have held over earnings or would you have exited on the bear candle?
So what I would have done is I would have looked how much up am I before earnings. So in this case, I wouldn't have been up a ton. So I probably would have exited. Yeah.
Got it.
The day or two before. Now, one of the things you guys have probably seen when you hold over earnings is sometimes FinViz will tell you one date, sometimes sometimes TradingView will tell you another date, and you have conflicting dates, and you have to know when you need to be out by, so you don't actually hold over. Holding over earnings is okay if it's part of the plan, but you don't want a gotcha moment where you look and you're up 2.5 R. When you went to bed, you woke up the next day, now you're down 6 R. You don't want that unless you're planning for that. There should be no big surprises, or as few as possible, but earnings should not be a big surprise as far as it makes big moves one way or another, assuming you want to ride the rapids over the earnings, or if you just want to go to shore for safety. Yep. Okay, so guys, go ahead and in the Slack channel, put a hashtag 10 EMA, and I will, we get enough response here, I will go ahead and take the PDF, first page of our strategy book, and I will put it in here, and I'll share it with you guys free of charge because I'm a nice guy.
Nice. No one has to pay extra for it.
Yeah.
Man.
All right, so I'll post that in just a second. I'm ready to go, about to post it. So any questions, guys? And I'll share my watch list with you here in just a second. Any questions? Again, it's supposed to be stress-free. It doesn't have to be. I mean, I remember thinking, Jeremy, I remember my very first, I told the story in my blog post that I started with a $300,000 account. That was my first, I'm going to rock it. I'm going to be, doubling it every couple months. And I was down 50,000, almost 50,000 on the first year. And so trying to trade from a villa in Greece from my laptop, all those dreams have been just shattered within a few months because I got punched in the stomach, kicked in the face, all kinds of Mr. Market just humbled me over and over and over and over. So then you struggle. There's some struggle, of course. Anytime you learn something new that's difficult, just like if you're trying to get a PhD, a doctor, you're trying to be an attorney, there's some period of time you have to go through the struggle of learning this thing where everyone else seems to know what they're doing, except you feel like it's just you. Or maybe you land in a foreign land where everyone is speaking another language. You're like, what's going on? What's happening? Everyone else seems to know what's going on. You're the weirdo who doesn't know what's happening, right? We all feel like that at times when we learn something new. But I tell you guys that you can literally spend nothing. You can do just our free education and you can learn some of this and make really good money. Ideally, you guys have three forms of income. Trading is one. Maybe your full-time job is one. Maybe you have a side hustle. So today I was headed back from Louisville, Kentucky, where I'm renovating I have a farmhouse that is being renovated. I was overseeing the contractors. I don't do a lot of the work myself, but I overseeing the contractor. It's one of my streams of income. Trading is my biggest stream of income right now. So I have other investments. So again, guys, stress-free trading, stress-free life when you have, and trust me, I have struggles. When I broke my collarbone, it's not just, I'm painting a slightly different picture than it is, but I'm saying you have the potential to do that. I choose difficulty and I choose difficult things, but it doesn't have to be that way. It's, it's a choice I want to make, because I'm not afraid of injuring myself. I'm afraid of not living. So, yep, that's what I have for you guys. Any questions? Your farm out in Oldham County. It's actually in Jefferson County. Can trading bring consistent income month to month? Yes, absolutely. Now, it may not be the same exact R every month. I think in the past, I don't know, however many months, I averaged 20 R, give or take. Like I said, at the end of August, I was only up 3 R.
Yep.
Until
Yeah, same for me.
Until go-go happened, and I had 100 contracts. You guys want to see this?
And the funny thing is 100 contracts weren't that expensive either.
No. Let's see. I bought it right around the end. I bought it right around here. I bought a $4 strike and I paid 40 cents. So right on this day, I bought
so 100 contracts, $4,000. You risked 4 Rs potentially if it went to zero.
Right. But I bought the January $4 strike. Now, how many of you guys would like, now I was tempted. It did, obviously the P&L got more and more green right here. I was tempted to exit right here. And I put in an order to sell maybe 10 contracts. And wouldn't you know, I think actually RLT took a weekly option newsletter right through here somewhere. And wouldn't you know, the option volume was just so minimal. I wasn't able to sell any of them. I put a little bit higher limit. I wasn't able to exit. So that's fine. I wanted to kind of stick with it. And then boom, up here, one of these 2 days, I sold a covered call against a fourth of my position and then rocketed higher and exited for, I think that was a 23 R trade, something like that. So some of you guys grind it out to make half an R all day in a day trade, which is fine. I want to sit back, do my thing, live life, sip my tea with the wife and kids on the patio. That's what I want. That's the quality of life I want. So, yep. Any other questions? Oh my goodness. Would you close some of the trades if you're profitable if it didn't hit your target or close? Yes. Somebody had a good.
I've been answering a lot of them for you, Matt.
Yeah.
Yeah. Because also, guys, Matt has a class in 33 minutes.
Yes.
So give us your watch list real quick, Matt.
Yes, I will share that.
Hurry up. I want it. I need it.
In the chat panel. Boom. There we go.
All right.
All right, guys. So if you look in Slack, I posted the PDF of the strategy.
Yep. So if you're watching this recording, go into Slack. Yep. If you don't have Slack, you should be a part of Slack and
search for the hashtag 10 EMA. Yep, and you'll see it in there.
Perfect. Well, this is going to be fun. Again, your weekend homework, go and back trade this, go practice this, go see how it does. We want to help you make this easier or simpler or more disciplined and more strategic. And the goal is every single Friday, Matt's going to come in and review his setups. And again, those setups are going to be trades that he took off of this exact strategy every Friday, along with some other strategies that he'll talk about in the future. And he'll walk you through, we'll follow them together. We'll be logging them together, the whole nine. It's going to be incredible. And we just want to give you another insight, because Matt always is striving for enrichment. And I think this is going to be a phenomenal way to do just that, my man.
Right. All right. So Monday is Merchant Monday. Do we want to go ahead and collect your?
I got them already.
You got them? Okay. Got it.
Already got them. So
all
team.
Right, yep.
Yep. Matt and I, we're going to be at the webinar in 30 minutes. Go RSVP. It's going to cost you a giant 0-0 burger. So make sure to sign up. Tell your friends to be there. We will record it if you can't make it, because we record everything. And ladies and gentlemen, have a great weekend. We love you. And until next time, love life, live life, and trade it. See you guys later.